Welcome to this update. Today we are going to talk about the Pioneer Reserve and the Pioneer Bond performance, as well as looking at what our best stock does, Tesla, and what I think is going to happen with a bigger market update after this long weekend. We are all excited about what is ahead. As you probably know, we went through some real challenges over the last 2 weeks, or let's say 6 trading days that were extremely challenging after this enormous run-up that the Pioneer Reserve, our trading strategy, had, trading and investment strategy. And so we are down 4.61% last week, which is a bad performance. And for the first time, we had a real underperforming week under Tesla. So Tesla is up. That is our key benchmark here, 0.89%. We are down 4.61%. We can look at the other benchmarks, not going to make a big difference, I think. Yeah, very similar with the S&P and so on. Tesla, NASDAQ, even worse with NASDAQ. So this was our worst week this year, and it's a warning to everyone who is following the strategies we are discussing here, or the tactics, on the short put side. Because what killed us last week were really strong short put positions that tore us down. Of course, the reason we had so many on Tesla was because we had high conviction that this is going to go up, and we got handsomely paid for that conviction. So month to date, we are still massively up 20% on the entire portfolio for this month alone, for May. That is a very good month. And more importantly, we are beating Tesla very strongly. We have an alpha over Tesla of 7.8%. Of course, we were much better before these last 6 days, but this is how it goes. You pay for performance, right? And year to date, we are now up 27%, still an alpha over Tesla of 32%. So massively outperforming. But again, we were in a much better shape 6 days ago. So now we are back to full reset. That is what you have to sometimes do. If you look at the stock, let's look at the stock and explain what happened there and what lesson we can learn, because this is, I can't learn much because I did what I was supposed to do, but all of you guys who want to maybe copy some of these strategies, it's very important to see what can go wrong or where you have to be very cautious. So what we saw with Tesla, I predicted very accurately that we are going very quickly back to 400 when we went to 350 or something, because of the larger situation. We knew Iran is over, the war is over. I said this end of April, I think, was very clear that there is no way to escalate this war again. The forcing functions are too high, so the macro situation was calming down, even though that was not clear to the market, but was clear to me. So I was very decisively long on Tesla. That totally sold off after earnings, which made no sense because the earnings were tremendous. And then once we went up to 400, I said we are going back to 490 in more or less very quickly. Now I knew there can be a little hiccup. That thesis stands. And because I was strong on this thesis, I went very heavily short puts. Short puts, you're selling puts in a bull market, bull run, which is a little better than long calls in my opinion, because long calls are extremely risky. Short puts are a little less risky. But because that was effectively synthetically highly leveraged, when we had the surprise slide that was very brutal, from 443 within 2 days down to 390 basically, that happened, we got hit extremely hard. Now, not as hard as we made money on the way up, of course. So that's why we have still a strong alpha here. But here I needed to massively reshuffle everything. I'm mentally prepared for these things. I know that this can happen, but still, I got also a little sloppy because we were building Pioneer Lands out. We have this tremendous new Pioneer Lands daily, the best news site for the age of AGI, for everyone who's actually interested in the future. So we can look into this later. But I got a little distracted here, not an excuse, but I was not totally on top of my game on Thursday when this happened. So I got hit very hard, and then on Monday I got hit hard again, and then I was fine again. But that tore us down enough. So when you do that and you get greedy on the way up, which I did, which was good, you have strong exposure when things go south. And then it's very important to react very quickly. I did react very quickly. That's why we are still in good shape. But it is a warning. You have to really be on top of it. So that is happening right now. And now the question is, of course, what do we do next? We also have strong NVIDIA positions. NVIDIA is doing actually pretty fine, but also got hammered in this whole thing. So when we look at NVIDIA, down to 215, we were, of course, and today up in pre-market, we were up a lot here. That was a beautiful bet all the way to 235. We went in pretty big at 176 or something. So that's our second largest positions because AGI, Tesla is the number one, NVIDIA, very reliable and kind of hedging the Tesla situation because NVIDIA is one of the best value stocks in the market, super low price earnings ratio at the eye of the storm. So nice little hedge there. And then MicroStrategy still doing strategically well for the year, but tactically we have a problem here with Bitcoin right now, but I'm not concerned. So this is the situation when we look at the Tesla outlook. Okay, we are now at 426, pre-market 430. When you see this video, it's probably already trading. The Iran situation, as I elaborated on Sunday, is pretty much over. We have a little bombing right now, but this is defensive bombing as a self-defense strike, says Trump, so I wouldn't take this too seriously. There's a lot of, pulling on Trump in the war direction, of course, from the usual suspects. But the forcing function here to end it and to open the Strait of Hormuz on the United States especially, but also on Iran, is just enormous. There is just no way they're going to mess this up, these two. The pressure is too high from the rest of the world and from inside the United States. So that is the situation. And if that is the case, and it is the case in my opinion, then we are positioned to fulfill the prophecy of Joe that Tesla is going to go back to all-time highs in no time. Why? Because when you look at this chart, December 16th was the all-time high of 490 roughly. We are now in a vastly stronger position. We did in Q1 exactly what I predicted, that we are sliding slowly down with no catalysts. Now CyberCap is ramping. The CyberCaps are getting deployed all over the United States. Some Uber bulls on Tesla say, oh, it's going to get unlocked right away. I think let's see what happens. But the fact is that these CyberCaps are now getting deployed all over the United States, that we are seeing hiring all over the place in all kinds of cities. And so I'm pretty confident that, as I said the whole time, that the CyberCap production ramp is our most reliable indicator of what's really going on with autonomous vehicle deployment for Tesla, and that this will remain a bullish indicator even if for now we will not see super active ramp. But you have to look through the robotaxi tracker or anything else you see and look right at the production of these CyberCaps. As long as they keep rolling out at the hundreds and soon thousands, and with soon I mean probably next month or in 2 months, thousands of them per month. I mean, what do you think is going to happen with these things? They effectively have no steering wheel or just a makeshift steering wheel. So they will become commercial this year. There's just not much else that can happen. I know a lot of people are frustrated and think, Joe, we have been promised this thing for 10 years. Yeah, but only since last month have we seen mass manufacturing of the vehicle that can only be used as a robotaxi. So at some point we all know it's going to happen, and I think this point is this year. And that will drive the stock up like crazy when it happens, and it will be a catalyst where even in a market crash, Tesla will look very good. Because this is the hard forcing function we have been waiting for. Okay? So we also know, by the way, not to forget that when we had the earnings call, April 22nd, that's a month ago, that Elon said we will see Optimus version 3 getting revealed in 90 days, which is now in 60 days, which means in July. Let's make it August for now. But that's not far off. And if that happens, and this thing looks good, which I think it will, hey, on this channel, we do something very important. We deeply analyze, understand, and predict capital, AGI, and politics. Not just to beat the markets and make a lot of money, even though that's important, but also to build a new society and make the future good for all of us, the pioneers. If you want to help me on this journey, you can do that by doing a very simple thing. Like and subscribe. It helps me a lot. Thank you so much for your support. And let's get back to the video. Okay, we haven't heard any updates on Optimus for a long time. Video coming up this week on Optimus, on a very important piece of the equation, because you can sell, Optimus can be cash flow impacting for Tesla at scale much quicker than people think if Tesla wants that. Because I said it the whole time, once this thing even barely works, there are millions of people who will put down 30,000, 40,000 bucks for a thing like that just because it's cool. There is no doubt that you can sell millions of these things, both into enterprise and industrial and to end consumers, whenever you decide you want that as Tesla. And that thing has a critical functionality which will be latest next year. I'm not saying perfect. I'm not saying even economically feasible. But that doesn't matter. This thing is so cool that you can sell millions, and that would have a huge impact. That's like doubling the car production. If you sell millions of Optimi, you know, for 40,000 bucks each, that's like doubling Model Y sales. Doubling. So this is going to be very interesting. I would not underestimate Optimus. I would also not underestimate it on a timeline. This might be more relevant than people think. So long story short, this is another catalyst I expect for July or August, which is very soon, which pins up, and that's a above $500 catalyst. Same, of course, with Robotaxi. If it scales, I don't know if it will scale by August. Who knows? But more likely than not that we see multiple hundreds of unsupervised in August. So there are now, it's the opposite of the Q1 prediction I had. It's the opposite. Now we have multiple hard catalysts at the horizon for July, for even Q2 potentially, but more likely for Q3, mid and beginning of Q3 coming up, which is a magnet and pull factor for the stock. So I think even without these catalysts, we could see 490 because the company is at least as good as the company was in December 16th, and the market is at more than all-time or at all-time highs and higher than it was there. So I would say without catalysts we're going to 490. With catalysts we're going above, and these catalysts are now on the horizon, on a 60 to 90 day horizon. All of that makes me bullish, but we should learn from the lesson of this week where we looked bad that if you go too leveraged, then you have to take off risk when things take a breather. And that's exactly what that was, a breather. It was pretty obvious it's a breather. There was some scare with the bond yields and everything on Friday, but I said it could be bad, but likely it's not bad. So it was just a completely normal breather. You see it with the NASDAQ that behaved very similarly. Here, that was the same breather, right? You saw that. So I think Tesla will follow the NASDAQ from here on out. We have to be prepared. And I will deploy synthetic leverage, meaning short puts, tactically only on Tesla. I'm not doing this with NVIDIA. I'm not doing it on MicroStrategy because when I do these things, I need to have extreme directional and tactical and very short-term conviction, which I only have for Tesla because that's very hard to get for a stock. That requires tremendous attention. For NVIDIA, MicroStrategy, Robinhood, some other stocks we like, I only have, strategic conviction. I can tell you where this thing is in 12 months, maybe in 6 months, maybe tactically can say it's oversold and very likely to bounce, but I cannot predict anything on a weekly or bi-weekly or even monthly level for NVIDIA. And if you can't do that, then short weekly puts are not a good idea. I can only do that with Tesla for now. So what am I going to do now to make up for these 5% alpha lost? Well, I already made up for it beforehand because we outperformed so nicely, but I want to get it back. I'm going to wait for this to clear up a little bit. I think the probability we are going to rally from here is high, but it's not guaranteed. When we were at 350, it was guaranteed. At 400, it was guaranteed. Now I would say, well, we have to be cautious. We don't know how strong that 445, 450 area is as a bounce. So once we go to 445, which could be today, could be this week for sure, could be for sure, not will be for sure, we could easily bounce again. So we have to be a little cautious here. Might take a little time to break through it. Once we break through it, I think 490 will maybe happen very quickly. Maybe there's a 470 bounce again. So whatever we do, if we go in synthetic leveraged, it is important to keep a safety buffer distance here. It's not easy to manage this whole thing, because what is that safety buffer for the short puts? You know, here at 430, do we want to have a strike price of 430? Do we want to play it super safe at 420? Do we want to play it aggressively at 435 in the money when we go short puts? Then, of course, the question is, how much risk do you pile on, right? Let's say you have 1,000 shares in the account. Do you want one options contract? Do you want 10 options contracts? 1-to-1 match? Or do you want to have 50? Don't do 50, right? Do you want a 5x synthetic leverage, 1x leverage, 0.1x leverage? These are the decisions we have to make. When we were at 350, I had a very heavy leverage. So that is the interesting question now. I am a little undecided. I will definitely put on some things, probably in a 425, 430 strike price area, but I'm definitely not going to go heavy leverage from here. We'll observe a little bit where we are at. I think the Iran conflict, what I like about it is that the market truly discounts it now. You even see, by the way, oil being down even after the bombing. So people have had it. They have basically the same conviction as I do. We see Brent going up, which should be expected if you see bombing again, but much, much more subdued. It's under $100. So most of the fall in oil prices after Trump announced that there's basically a peace agreement still holds despite the bombing. So Iran vows retaliation. So people are extremely unnervous about this whole situation because they agree with me, even though they might have been not watching the channel, who knows, that there is no escalation option here for anyone. Obviously, that means if something bad happens and someone is forced to escalate, all hell will break loose. So it's not that I'm saying this is not a dangerous situation or that the world is not at the brink of total collapse if this escalates, but because it's so transparent and so clear to everyone in the market assumes it just can't escalate from here. The clock is ticking, of course, right? They need to open the strait now. They need to open it probably by next week or in the next 2 weeks, or it's going to get really bad and it's going to cut into the bone. And then there might be some repricing. So we have that risk there, but everyone knows that. So the market is betting on this is going to get resolved. And I am too. We just have to watch out for it because there is real risk here. Okay, so that is going on. That is the situation. I think we are going, besides that macro problem that is kind of forcibly resolved, we're going into a nice summer situation. Of course, you never know. We had last Friday the scare with the bond yields, but I think the bonds are also down again. Yeah, they're totally down. They were at they peaked at 4.6 or something, or even 4.8. Now they're down to 4.48. So they're jumping around like crazy, by the way. This is not a normal thing. And looking good. So cautiously bullish. Tesla should go to 490, but it will be market dependent. If the market has a hiccup, Tesla has a hiccup, we need to watch it. But cautiously bullish, driving this baby to 490 and a 60-day horizon of bigger things coming that could catalyze it above it. If we go to 490 before, prepare for a drop. That's what I'm doing. And it's all about risk on, risk off, risk neutral, risk a little on versus risk a lot on. I'm a little risk on right now. So I hope that was interesting. We will cover a little bit more on the optimist side this week and are also preparing some bigger macro and Pioneer Lands content. That's why I'm so distracted, because we are preparing some super exciting things. I'm not going to talk today about it, but this week. And latest on Sunday, we will give you a full update on the Pioneer Lands publishing and research strategy that is coming together very nicely. I showed everyone on Sunday the knowledge graph of Pioneer Lands, and that thing is beautiful. It will help us to be the best researchers in the world on the future of AGI and our countries, our companies, everything. And I think it will be extremely exciting. So you can see it here, by the way, quick preview. I don't think that's live yet, but Pioneer Lands Daily, where we aggregate all the news. Here you see SpaceX IPO today, And on the research side of things, we will have this very cool knowledge graph. I can't see right now. I can't show it to you right now, but I will show it to you on Sunday in its latest iteration, and it's going to be pretty awesome. I hope that was interesting. See you very soon.